Nvidia is the most valuable company in the world with a market cap now over $4.4 trillion. The company just reported their Q2 earnings, so I dove into the earnings report and earnings call to give you guys a full update. Following the report, the stock sold off 2.5% after hours. There certainly has been far worse sell-offs than that. But the real reason why we're diving into Nvidia stock here is that it has such an important impact over the entire stock market. And that's even if you don't think you own Nvidia stock. As an example, if you invest in the S&P 500, Nvidia is the number one holding. It makes up over 8% of the fund. If you invest in the NASDAQ 100 index, as an example, QQQ, Nvidia is over 10% of that fund. But it doesn't stop there. It impacts all the major big tech companies that are investing in AI. These are the primary companies buying chips from Nvidia. Nvidia's revenue is the CapEx spend of these other large big tech companies, most notably the hyperscale cloud companies. That would be Microsoft with Microsoft Azure, Amazon with Amazon Web Services, Meta with their massive data center infrastructure, and Alphabet with Google Cloud and their internal data center infrastructure. On Nvidia's latest earnings call, the CEO said that over the past 2 years, those top 4 hyperscalers have doubled their CapEx, and they're now at a run rate of over $600 billion a year towards AI infrastructure. And a large chunk of that money is going towards Nvidia. So possibly without knowing it, at least 20% of your portfolio is allocated to this AI story. Will spending keep going up and help these chip companies? Will the big tech companies spending the money be getting a good return on their investment? Will they throttle up or throttle down their spend? Those will be the major questions driving the stock market over the next couple years. As of right now, Nvidia is one of the best businesses in the history of the world. As you can see, their earnings per share have exploded over the past few years, largely due to their data center business. And it is a high margin, high cash flow, money printing machine. So let's dive into the video. I'll give you a full update on their Q2 earnings, and then give my thoughts about Nvidia stock moving forward. So let's roll the intro and get into this Nvidia analysis. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using dividenddata.com to help in my research and analysis. In my opinion, it's the best stock research tool. We just put out a major update expanding our research to include ETFs, mutual funds, and more international stocks. And our overall coverage went from 8,000 to over 80,000 options to research. If you want to learn more about that and follow along with me throughout the video, it's all available at dividenddata.com. The link is in the description and pinned comment of the video. All right, so before I give a full big picture stock analysis on the company, let's dive into just Q2 and see what happened. And perhaps it will tell us a little bit about why the stock sold off after hours. So I did read the quarterly report and listen to the earnings call, but since this is an Nvidia video, let's use AI to help us summarize what happened in the quarter. And if you want to use this, it's in the AI Analyst on dividenddata.com. So Q2 revenue came in at $46.7 billion, which was a 6% increase from the previous quarter. And again, Nvidia has been growing rapidly over the past few years, so they've been using the quarter-on-quarter growth metrics. And most companies don't even mention that. And that is a 56% increase from the same period the last year. So that's a $46.7 billion a quarter business that grew 56% year over year. And the overwhelming majority of that revenue is from their data center segment. Remember, Nvidia used to be a video game company, and these were gaming GPUs. People were put in their computers to play video games. But over the past 5 years, the economics of the business finally caught up to this new use case around AI, and the data center side just completely exploded. For context, 88% of their overall revenue now comes from the data center business. That's up 5% from the prior quarter and 56% year over year. And their next generation chip, Nvidia Blackwell, that grew 17% sequentially. And that new next generation platform will be a growth driver for them in the coming years. The margins at Nvidia are nuts. They have 72% gross margins. And the reason that they're able to do that is, one, they have massive amounts of demand and they have relatively high prices. But you would still say this is a hardware company. How do they have such high gross margins? Especially in semiconductor manufacturing. Have you seen the margins on some of these companies? Well, the main reason for those high margins is that Nvidia is one of the best examples of a fabless semiconductor company. This means that they design and sell their hardware, but they outsource the actual manufacturing of it to third-party manufacturers like Taiwan Semiconductor. So that means they don't have to front the massive cost of building out these semiconductor fabs. So Nvidia has these incredibly high margins on their chips, but then they also get to rake in and retain all of those earnings. It's not going just back into building more infrastructure. As you can see, Nvidia's CapEx over the trailing 12 months was around $4 billion, which is growing. But if we take a look at their free cash flow as of last quarter's trailing 12 months was $72 billion. So you can see how Nvidia's business has just become an absolute money printer. These economics at Nvidia have made it very attractive for investors. But the big question really is how much it can keep growing and for how long. And at least according to their current outlook, it seems like it will keep growing for at least this year and likely the coming years. They're already in their fiscal year 2026 and their next quarter will be Q3. And Nvidia is expecting approximately $54 billion of revenue for that quarter with a margin of error of plus or minus 2%. So that's nearly an $8 billion increase in revenue quarter over quarter. They're also expecting gross margins of around 73%. So Nvidia might still have a lot of growth ahead. This news just came out, so my software hasn't updated yet with the latest EPS data, but it came in at $1.04, which will give them an all-time high in quarterly earnings per share. And it's just insane how rapidly the earnings per share has grown. And all signs right now, from the big tech earnings calls to Nvidia's own earnings call, it seems like this is set to continue well into the future. For the full year fiscal 2026, analysts are projecting 49.5% earnings per share growth. That would give them $4.41 in annual EPS, which would be a 41.1 P ratio based on today's stock price. And it's not expected to stop there. They're expecting 36% growth in 2027. But beyond that, it starts to get a lot more cloudy about what Nvidia's growth will really look like. If you're buying Nvidia stock today, you need many years of high growth ahead. It's definitely had it historically. If we take a look at their revenue per share, the 5-year CAGR is 63.98%. And if we just take a look at their quarterly revenue per share chart, one of the most impressive growths I've ever seen for such a large company. The same is true with net income per share. We have a 91.6% 5-year compound annual growth rate. And again, Nvidia is a free cash flow machine. Their free cash flow per share, 5-year CAGR, 69.8%. 3-year CAGR, 96.67%. From fiscal year 2024 to 2025, they saw 126.4% growth in annual free cash flow per share. And in terms of the actual business of Nvidia, they're in a great position. They are raking in cash right now. Their balance sheet is growing significantly. Shareholder equities at all-time highs. As of last quarter, they had $52.6 billion in cash and short-term investments. They have very little debt. Their net debt is negative $42.4 billion. And because of how much cash they're generating relative to the amount of debt they're taking on, their financial position only gets better and better. So there's no doubt that this is a great company. The biggest risk, though, with investing in Nvidia is that you are entirely reliant on the spend of all the other large big tech companies. So does Microsoft, Alphabet, Amazon, Meta, do they keep increasing their CapEx spending year after year after year? Or are they kind of front loading some of it and they'll have a more balanced approach and wait for the demand to come on the AI side? Those are the questions you kind of got to be asking. Now, personally, I'm a little bit more bullish on the AI trend, and I think it will realize over the coming years, and especially over a multi-decade view. And Microsoft, a stock I talk about a lot on this channel and my largest company in my dividend growth stock portfolio, their largest growth business is cloud, and it makes sense at this time for them to continue reinvesting in the infrastructure, which will fuel the growth of that business. And these companies right now, I've been listening to their earnings calls, they don't feel like they're overspending. So if you're investing in Nvidia stock, that's good news to hear, and you want to keep hearing that news for as long as possible. And my overall thoughts with Nvidia stock is I don't know if it's a buy right now at this price, but if you've been holding the stock for a while, I'd keep riding the roller coaster. This is a very high quality company that will be around for many years to come and for the foreseeable future has a lot of growth ahead. However, if you're more of a trader in and out of Nvidia stock, I would wait till I hear news from most of the big tech companies, Microsoft, Amazon, Meta, you know the names. Wait until they say they're cutting spending. And that's how you'll know when this Nvidia bull run is probably over. But that doesn't mean the company is over them. They will probably be raking in tens of billions of dollars a year in free cash flow. Hey, maybe by that time, hundreds of billions of dollars a year. And it's a great company that'll be around for a long time. Very impressive story. If you enjoyed the video, please leave a like, comment, and subscribe to the channel. And if you want to use the stock research tool I showed throughout, it's all available at dividenddata.com. The link is in the description and pinned comment of the video. With that said, thanks for watching, and I'll see you in the next one.